Hey everyone, welcome back to Corporate Decoder, where we try to make sense of the confusing stuff companies put out there. Today we are diving into Oblong Incorporated's recent 10Q filing, and let me tell you, there are some interesting moves happening, especially with their pivot to digital assets, so buckle up because this report is a bit of a mixed bag. Before we jump in, if you appreciate getting the inside scoop on these corporate filings without all the jargon, make sure to hit that subscribe button. Also, we've got a fantastic community over on Discord where we break down even more of these reports. The link is in the description below, so join us there. Alright, let us get straight into what Oblong Incorporated has been up to. This is their quarterly report, a look at how they have been doing financially for the period ending the 30th of September of this year. Looking at their balance sheet, what jumps out is how their assets have been reshaped. Back on the 31st of December of last year, their cash and cash equivalents were about $5 million and they had virtually no digital assets. Fast forward to the 30th of September this year, and their digital assets are now worth a substantial $6.6 million. Meanwhile, their cash has dropped to around $3.7 million. This clearly shows the company is putting significant money into digital assets. Now, let us talk about the financial performance numbers. For the 3 months ending the 30th of September, Oblong reported a net loss of about $2.3 million compared to a loss of just over $1 million in the same period last year. For the 9 months, the net loss was around $3.6 million this year, up from about $3.2 million last year. It is clear the company is still losing money, but the shift towards digital assets is a big strategic move that is affecting these numbers. Speaking of digital assets, they are starting to generate some revenue. For the 3 months ending the 30th of September, they brought in $97,000 from staking rewards. For the 9 months, that number was $99,000. It is a small start, but it shows their investment in digital assets is beginning to pay off a little on the revenue side. However, this is offset by costs. They are also incurring other costs related to these digital assets like advisory fees, which were $84,000 for the 9-month period alone. The company is clearly investing heavily in this new strategy. The company granted some warrants to advisors in June, which is a standard way to compensate them. This added about $375,000 in costs that will be spread out over time. They've already recorded $84,000 of this expense with more to come. Oblong has two main business segments historically, collaboration products and managed services. But their digital asset operations are currently being reported under corporate activities, not a separate segment yet. This might change as the digital asset business grows. Here is where the digital asset investment gets tricky. For the 3 months ending the 30th of September, Oblong recorded an unrealized loss of $1.5 million on their digital assets. For the 9-month period, that unrealized loss was about $1.5 million as well. This means the value of their digital asset holdings went down significantly in these periods. This is a major risk when you are heavily invested in volatile assets like digital currencies. They hold dollar Tau tokens and they are staking most of them. Staking means locking up digital assets to earn rewards, which they are doing to try and generate yield. Most of their staked assets are considered current assets because they can be readily converted to cash if needed. As of the 30th of September this year, their total digital assets were valued at $6.6 million, with a cost basis of around $8.1 million. This means they are currently holding these assets at a loss of about $1.5 million. Looking at their cash flow for the 9 months ending the 30th of September, Oblong used about $2.3 million in operating cash. They also spent a significant $8 million on investing activities, which was mainly their purchase of digital assets. On the financing side, they raised a good chunk of cash. For the 9 months ending the 30th of September, they brought in over $9 million from financing activities, largely from a private placement and warrant exercises. This cash infusion is crucial for their operations and their digital asset strategy. The company's common stock is listed on the Nasdaq under the ticker OBLG. As for shares outstanding, they have over 3.2 million. They also have a stock repurchase program in place, but they have not bought back any shares yet. Oblong has a complex web of warrants out there. They issued common warrants and placement agent warrants. The exercise price for some of these was adjusted down to $3.41 due to something called the make-whole provision, which essentially adjusted the terms after a stock split. This resulted in a significant dividend of nearly $9 million in 2024, which impacted their net income available to common shareholders. More recently, in June of this year, they had a private placement and issued pre-funded warrants, raising about $6.9 million after fees. Many of these warrants have already been exercised this year, with over 1.2 million exercised in the 9-month period. This means more shares are coming into play. Looking at the 9-month performance, revenue has remained flat at about $1.8 million compared to last year. However, the composition has changed. Managed services revenue is slightly down, while collaboration products revenue has also decreased. The big new component is the digital asset revenue, contributing about $99,000. This revenue comes with costs. Cost of revenue for the 9 months is about $1.1 million, a decrease from $1.6 million last year, mainly due to lower costs in their collaboration product segment. Overall, operating expenses have decreased by 17% to about $2.9 million for the 9-month period. This is mostly due to reduced spending in collaboration products and corporate expenses. They've seen a big drop in research and development and sales and marketing too, likely reflecting a shift in focus away from those legacy areas. This leads to a net loss before taxes of about $3.6 million for the 9 months, which is a 13% increase from last year's loss of $3.15 million. Now, let us talk about their ability to keep the lights on. As of the 30th of September, they had $3.7 million in cash and $9.8 million in working capital. They believe this is enough to keep them going for at least the next 12 months. However, they also plainly state that in the long term, they will need more capital, likely through more debt or equity offerings. Let's move on to the risks. They really highlight the reliance on a few big customers. For this quarter, one customer made up 80% of their managed services revenue. That is a huge concentration and a major vulnerability. If that customer leaves or reduces spending, it could seriously hurt Oblong. They also warn that future stock or debt offerings could dilute existing shareholders and potentially lower the stock price. Given their need for capital, this is a very real possibility for investors. And of course, their big play into digital assets comes with huge risks. They acknowledge the extreme volatility of these assets and the potential for significant losses. They also point out that digital assets are not insured like traditional bank deposits, meaning a theft or loss could be a total and irreversible catastrophe. The fact that digital asset transactions are irreversible is a critical point. A simple mistake or a hack could mean losing everything with no way to get it back. This is a stark warning for anyone considering investing in companies with significant digital asset exposure. Ultimately, Oblong is betting big on digital assets and decentralized AI. Their old business lines are struggling, and this pivot is a make or break moment. The success of this strategy is heavily emphasized as crucial for their future. There are no guarantees it will work or that they can even pull it off effectively. So, what is my take? Oblong is in a very transitional phase. They are clearly acknowledging that their traditional business is not cutting it anymore and are making a bold move into the world of digital assets and AI. This offers potential for high growth but comes with immense risk due to asset volatility and regulatory uncertainty. The concentration of revenue from a single customer is also a major red flag that cannot be ignored, while they've raised capital to keep operations going. Their future profitability heavily depends on the success of this digital asset strategy and their ability to manage the inherent risks. For investors, this is a high-risk, potentially high-reward scenario that requires a deep understanding of the digital asset market and its associated dangers. Alright, that is our breakdown of Oblong Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. And don't forget to check out the Discord in the description below to join our community of corporate sleuths. Thanks for watching. See you next time.